Peter Maguire is joining us. He's CEO XM Australia on the show. Peter, great to speak with you once again. Very good morning, at least from where we are. And just to get a sense from you on whether it's going to be a very, very big deal and a big disappointment if we have just a 25 basis point rate cut.
Well, that's a big question, Tamana. Good morning. Greetings from Sydney. I'll tell you what, I feel as though that's a toss of the coin, and that seems to be general consensus at the moment. It's about a 50-50 play. We're even hearing the likes of Elizabeth Warren saying, you know, do we need 75 basis points? So let maybe park that to the right. But yes, I think the market's going to be an each way bet. There's I think a strong support for 50 to front load this as far as how many basis points you want to achieve by end of year cut. But there's still many market analysts suggesting that 25 is going to be the pathway forward. So, yeah, we haven't got long to wait, and it'll be interesting to see what the result will be.
I still trying to understand, if it's only 25, forget the 75, if the base case is 50 and if it's 25, do risk assets take a dip, even if it's only for a short term?
Well, Niraj, maybe they could take a little bit of a dip because it may not meet what the expectation was from traders. You've got to look at volatility over the last couple of weeks and where the market's been really demonstrating that from a vol play. And you've also got to appreciate that US equities are at all-time highs, and pretty much so across, you know, if you look at the NASDAQ, the S&P and the Dow. So I wouldn't be surprised to give a little bit of hot steam. We've just got to see, again, market reaction and the value of, naturally, the US dollar if you see a further sell-off as far as US dollar index, and what that's going to do to cross rates and the likes of commodities.
Peter, just talking about commodities, and I'll come to crude first. So crude has been trending upwards, of course, pulling back from its lowest levels. And then you again have the output increase that is expected in December. Where are you seeing crude rates settling? And will a 50 basis point cut set the stage for a further bounce up for crude?
Well, a couple of things. First off, Tamana, maybe it might see a bit, because I feel as though that it was probably oversold. It did hit that nearly to 67 for WTI. You're running in the best part of over $71 a barrel as of today, or there's a screen, $70.86. So I wouldn't be surprised to see it maybe bounce a little bit further to the upside. As far as demand picture leading into winter, if you do see a back off as far as interest rates, then that could be a telltale sign. We've also got, you know, as far as energy prices in the States, they're well off their highs of what they were experiencing over the last year, though they're still relatively chunky compared to where they were, you know, putting back to, say, 2020. So there seems to be the consideration. If you haven't got any geopolitical hotspots over the next couple of months and weather outages, then you might see crude, you know, be range bound. But if you add both of those scenarios in, that could change the landscape considerably.
Peter, one final question. Today, Goldman has revised the iron ore outlook downwards. Industrial metals are anyways taking it on the chin because of China and the growth not bouncing back. Where are you on this argument? Do you foresee the rest of the year to have a protracted downtick or a continuation of this somber performance at the industrial metals front, be it iron ore, be it aluminum or others?
Well, Niraj, I think, you know, if you're looking at copper at the moment, and that's a good barometer, since it's trading at around about 92, 9,300. I've got on my screen here 93.70 a metric ton for on the LME. I wouldn't be surprised for them to probably oscillate where they are at the moment. I think from a range-bound perspective, you know, you might see a low of 86, 8,700 up to, say, 94, 9,500. So it's going to be range-bound. You've only got to look at that, I suppose, forecast from an iron ore perspective, and that's pretty bleak at $85 a tonne. But it's the price is the price, and that seems to be the general consensus out there. That's the consideration as far as how China's positioning itself, and they're the major importer. So we've just got to see. Global demand has got to pick up for finished goods, and this could be the turn of the season as far as interest rates dropping and a time for 2025 to be a little bit more global growth. Okay.
Peter, we'll leave it at that. Thanks so much for joining in, and all the best for the big Fed meet.